The SEC has just dropped a new bombshell that could change everything for XRP and the entire crypto market. This isn't just another headline or minor update. It's a pivotal moment that could reshape the way digital assets are defined, traded, and regulated in the United States. If you thought the Ripple versus SEC case was just about one token, think again. Because what just happened isn't just Ripple's fight. It's about whether cryptocurrencies are going to be treated like securities, commodities, or something entirely new. The ruling, interpretation, or legal shift from this case could serve as the blueprint for how regulators approach Bitcoin, Ethereum, stablecoins, and every new token that launches in the future. And here's why this matters. The United States is one of the largest financial markets in the world. Whatever regulatory framework is decided here will influence how global investors, institutions, and even governments view crypto. If XRP is defined in one way, chances are regulators will apply that same lens to everything else. That means this case could set the precedent for how exchanges operate, how projects raise funds, and how everyday people like you and me are allowed to invest. Think about it like this. This isn't just a battle over Ripple's future. It's a battle over crypto's identity. Is this technology going to be embraced as a legitimate financial system of the future? Or will it be boxed in by outdated laws written decades ago? That's the weight of this bombshell. And trust me, the implications are massive. Because depending on how this unfolds, we could be looking at two very different futures. One where crypto thrives under clear rules, or one where innovation is suffocated by fear, uncertainty, and endless legal battles. So here's the deal. The SEC just filed new arguments that don't just take aim at Ripple. They're swinging at the entire crypto industry. This isn't just about XRP anymore. It's about the very definition of what a digital asset is. The SEC is basically saying, look, if it walks like an investment, talks like an investment, and people expect profit from it, then it's a security. Now pause and think about that. If this argument holds, it doesn't just mean Ripple has to play by Wall Street's rulebook. It means every major project in the crypto space could suddenly be boxed into the same old financial system we thought blockchain was escaping from. And here's why that matters. Securities are buried under layers of regulations. We're talking mandatory disclosures, licensing, strict oversight, and potential bans on trading without the government's blessing. Imagine your favorite exchange having to delist half its coins overnight just because they can't meet those requirements. Imagine projects freezing development because they can't afford legal battles. Imagine investors, regular people, suddenly finding out their holdings are tied up in legal uncertainty. But here's the kicker: if XRP is permanently labeled a security, it becomes a precedent, a domino that could knock over the rest of the market. Ethereum? Vulnerable. Cardano? Vulnerable. Solana? Vulnerable. Even Bitcoin's ecosystem could get caught in the crossfire if the interpretation stretches far enough. This isn't just about a lawsuit, it's about the future framework of crypto itself. The SEC is trying to redraw the entire battlefield, and depending on how the courts respond, we could be looking at either the biggest clampdown in crypto history, or the moment the industry finally forces clarity that fuels the next wave of adoption. The real impact. Here's where things get serious. If the SEC's new stance holds, we're not just talking about Ripple or XRP anymore. We're talking about the entire foundation of cryptocurrency as we know it. To understand the gravity of this, you need to step back and look at what it actually means when something is classified as a security. A security is not just a label, it's a legal framework. Securities, whether they're stocks, bonds, or derivatives, come with some of the most complex and demanding regulations in finance. Issuers have to file disclosures, reveal financial statements, get audited, operate under strict oversight, and follow compliance rules that stretch hundreds of pages. That system was built for corporations raising capital from investors. Now imagine trying to force that same framework onto crypto projects, many of which are run by small developer teams, open-source communities, or emerging startups. They don't have billion-dollar legal budgets. They don't have compliance departments the size of Fortune 500 companies. If the SEC successfully imposes this standard across the board, most of those projects simply wouldn't survive. Innovation would slow to a crawl, and the barriers to entry for new ideas would become almost insurmountable. And here's where it gets personal for investors and traders. If XRP is formally locked down as a security, It doesn't just government aligning with the SEC and on a campaign of demonetizing. One major asset is classified this way. Regulators gain leverage to apply the same logic to Ethereum, Solana, Cardano, and potentially even stablecoins like USDC and USDT. Suddenly, the entire crypto ecosystem would be standing on shifting ground. But the real shockwave comes if Bitcoin itself is ever dragged into this debate. Many believe it's safe because of its decentralized origin, but the truth is, if regulators decide to push the boundaries, even Bitcoin could face restrictions around how it is traded. And if that happens, the global crypto market would undergo a complete reset. Exchanges would need expensive licenses. Custodians would face stricter audits. Retail investors, ordinary people, would no longer have the same open access to buying and selling. The free, borderless nature of crypto could start to look more like the heavily gated structure of Wall Street. Now, let's cut deeper. This isn't only about rules, it's about control. The SEC isn't just enforcing laws. It's positioning itself as the ultimate gatekeeper of crypto. By defining what counts as a security, they gain power over who gets to innovate, who gets to invest, and who gets to compete in the digital asset space. That fundamentally changes what crypto was built to represent: financial freedom, decentralization, and global accessibility without middlemen. But here's the irony of it all. Regulation isn't inherently bad. Too much regulation suffocates progress, but too little regulation opens the door to scams, fraud, and chaos. The balance should be about protecting investors while still allowing innovation to thrive. The problem is, the SEC doesn't appear to be seeking balance. It appears to be seeking dominance. And don't forget, the United States isn't acting in isolation. The world watches closely. Whatever precedent gets established here could be mirrored in Europe, Asia, Latin America, and Africa. The Ripple case, whether people realize it or not, has global stakes. The way the US defines XRP today could influence how the entire world regulates crypto tomorrow. This isn't just a fight about one company. This is a fight about the future of money itself. Real-world parallels: why this fight isn't just about Ripple. Here's where it gets really interesting. To truly understand what's happening with Ripple and the SEC, you need to zoom out and look at history. Because believe it or not, this isn't the first time innovation has collided with regulation. And every single time, the outcome reshaped industries, economies, and the daily lives of millions. Think back to the early days of the Internet. In the 1990s, there was no clear regulatory framework for online businesses. People debated whether online sales should be taxed, whether digital signatures were valid, and whether companies could even operate across borders on this new thing called the web. Some regulators wanted to clamp down, saying online commerce would be rife with scams and should be heavily restricted. If those restrictions had stuck, companies like Amazon, Google, and PayPal might never have grown into the giants we know today. The world economy would look very different. Now fast forward to today, crypto is at that same crossroads. Just like e-commerce disrupted physical retail, crypto threatens to disrupt traditional banking, remittances, and even how we think about money itself. And just as governments once feared online shops bypassing tax systems, today they fear digital assets bypassing traditional financial systems. Another example: Uber and ride-hailing apps. When Uber launched, regulators in cities like New York, London, and Paris pushed hard against it. Why? Because it threatened entrenched taxi unions, license fees, and decades of regulatory structures. But people loved Uber's convenience. Regulators eventually had to adapt. Some introduced new rules, but they didn't shut Uber down. Today, ride-hailing is a global norm. The Ripple SEC battle mirrors these stories. If Ripple is permanently labeled as selling unregistered securities, the precedent doesn't just affect XRP. It's like saying every single crypto project, unless proven otherwise, is guilty. That's not just regulation, that's strangulation. Imagine if, in the 90s, regulators declared every online business illegal commerce, unless it applied for the same licenses as brick-and-mortar stores. The Internet's growth would have been stunted for decades. And let's make it even more personal. Think about everyday money movement. Right now, sending $100 across borders could cost you $10 to $20 in fees and take 2 to 5 days to clear. Ripple's technology promises to cut that to seconds with almost zero fees. If regulations cripple Ripple, they don't just slow down crypto brothers. They delay a system that could save billions of dollars for migrant workers sending remittances, small businesses trading globally, and even NGOs trying to get funds into crisis zones. Here's the kicker. Every major innovation in history, electricity, the telephone, the internet, ride-sharing, streaming, faced resistance because it disrupted the status quo. The Ripple versus SEC saga is this generation's version of that battle. It's not just about one coin. It's about whether regulators will allow blockchain and crypto to evolve freely, like the internet did, or try to cage it in rules that were written for an era of paper stocks and fax machines. What this means for you and the market. So now let's get real. What does this SEC bombshell mean for you as an investor, as someone building in crypto, or even just watching from the sidelines? First, uncertainty. Markets hate it. Whenever regulators throw ambiguity into the air, investors hesitate, projects slow down, and capital moves cautiously. Think about it. If you're a startup founder wanting to build the next Ripple or the next Solana, but you're unsure if your token will be labeled a security tomorrow, would you risk launching in the US? Probably not. You'd move to Dubai, Singapore, or Europe where rules are clearer. And that's already happening. Projects are leaving the US because of unclear regulations. This bombshell could accelerate that crypto brain drain, talent and money flowing overseas, leaving America playing catch-up in innovation. Second, investors need to rethink strategy. If XRP is eventually labeled a security, it means stricter trading rules, possibly limited exchanges offering it, and new disclosure requirements. Imagine logging into Coinbase and suddenly half the tokens are delisted because they're deemed securities. That's not a small ripple, that's a tsunami. But here's the flip side: clarity brings confidence. If the SEC, courts, or even Congress finally draw the line and say, this is a security, that is a commodity, the fog lifts. Institutional investors, the big players with billions of dollars, actually prefer clarity even if it's tough, because they can finally build compliant products, ETFs, mutual funds, retirement accounts. That's when you see the BlackRocks of the world diving into crypto full force. Third, let's connect it to history. Remember when the dot-com bubble burst in the early 2000s? The internet wasn't killed off by regulation, it was reshaped. Out of that chaos, Google, Amazon, and Facebook emerged stronger because they adapted to the rules of the road. Crypto might be at a similar crossroads. The projects that survive this regulatory storm could become the Googles and Amazons of blockchain. And fourth, this is about power. Regulation isn't just about protecting investors. It's about who controls the future of money. If XRP, Bitcoin, Ethereum, or any crypto threaten the dominance of traditional systems, then governments will fight to keep control. That's why this bombshell isn't just about law, it's about who writes the future of finance. So here's the takeaway. Whether you're bullish or bearish, whether you love or hate XRP, don't ignore this moment. Because this isn't just about Ripple. It's about the rules of the new financial game. And whoever understands and adapts early wins. Think about this for a second. We're standing at a crossroads. On one side, a future where crypto finally gains the clarity and legitimacy it has been fighting for since Bitcoin's white paper in 2008. On the other side, a future where regulators choke innovation, stifle adoption, and decide who wins and who loses in an industry that was built to be free from gatekeepers. And right now, with this single SEC move against Ripple and XRP, the scales are tipping. Slowly, but surely. Ask yourself, if XRP becomes the legal blueprint for how the US treats digital assets, what happens to your favorite token? Ethereum? Solana? Cardano? Even meme coins? Do they survive this new standard? Or do they collapse under the weight of regulations they were never prepared for? Because here's the uncomfortable truth nobody wants to admit. This fight isn't just Ripple's fight. It's Bitcoin's fight. It's Ethereum's fight. It's your fight. Whether you're holding XRP, SHIB, Doge, ADA, or any other coin, if the SEC's blueprint becomes law, it doesn't just decide Ripple's fate. It decides the fate of the entire crypto revolution. And history has shown us, whether it's the internet versus government regulators in the 90s, or Tesla versus the auto industry giants, Those who bet against innovation always lose. The only question is, how long until the system catches up, and how many casualties will we see along the way? So buckle up, because the coming months aren't just another crypto news cycle. They are a once-in-a-lifetime shift in financial history, a shift that could determine whether your portfolio turns into dust or into generational wealth. And you don't want to miss a single piece of it. This is bigger than a price pump, bigger than a chart breakout. This is about the survival of crypto as we know it. And if you're here watching this right now, it means you're already ahead of 99% of the world who won't even see it coming until it's too late. The next chapter is already being written, and when it drops, you'll want to be the first to know. So subscribe, hit that bell, and stay with me, because what's coming next is going to shake the foundations of money itself. The question is, will you be ready?